All right, we can go ahead and get started. We just started the recording button. This is Sunday, December 18th. Wow, the last 2 weeks of the year. Christmas Eve is this coming Saturday. And then we got Christmas on Sunday. Then we got basically the last week of the year. And then it's the next Saturday is New Year's Eve. And then we got New Year's. And then we're in a new year, financial year. It's just great. All right, so let's go to the news. This is basically, I don't know, the last 2 weeks of the year is it's low volume, but this is technically the last week. We're going to see some movements on regular pairs. Okay. Not a lot of radical movement, but if anything, it'll be either a pivotal point this week. So we either have a pivot point this week in terms of pullbacks and reversal, or it would be more drifting. So I think it's going to lean more towards pivot points and reversals and pullbacks. And then the next week, it'll be more drifting, meaning it'll just kind of like just float up and down in a short range in that direction. Okay, so we'll take a look and see what's going on with the news this week. Last week, we had like 4 bank rate decisions, including U.S., Swiss francs, pound, and euro. Wow, that was a crazy week last week with some good volatility. And then Friday, kind of a trap day. Okay, so let's go over the fundamentals for this week, and I'll also go over any fundamentals for next week as well. So this is technically our last live trade room session, kind of a top-down analysis session. We're not going to have any live trade room session this week, and then we'll come back and we'll start off the year, believe it or not. We'll do like a top-down analysis on Monday, January 2nd. We won't do it on Sunday, but we'll do it on Monday, January 2nd. So I'll do like a special session on Monday. So look out for that invite for January 2nd. We'll do a live trade room session instead of Sunday, January 1st. And we'll do it on the 2nd. We'll do a New Year 2003 kind of an outlook. All right. So I'm going to kind of wrap up this year and try to give an analysis of what it would look like for the next 2 weeks going into the new year, of what I think what we're looking at from a both technical and fundamental. Okay, so let's start with fundamental. This today, not really much. Monday, tomorrow, we do have monetary policy minutes meeting. So this would be, basically tonight, Sunday, and then through the London session, I don't expect to see anything. And then on Asian session, this right here, the monetary policy minutes will be a big deal for Australia. And I can probably expect to see some very good and hawkish comments coming from Australia. Australia is not in a bad place, even though the currency's kind of been beat up for the last 6 months. I would say more like for the last, I don't know, 3 to 4 months, if you will, maybe 3 months, since October, September, against other pairs like Odd CAD. I want to say, Odd Chef. It's been pretty strong, but against NCD has been stronger for the last 3 to 4 months, if you will, versus the two currency. But Odd has, been somewhat strong, but it's been weak against, euro, like euro odd and euro pound, euro and pound. So euro odd and pound odd been pushed up when odd CAD and odd chef's been doing very well against those pairs. So I would expect those two to be inverse, right? So odd chef and odd CAD will be, pushing down. Pushing up, and then euro odd and pound odd to be, we'll take a look at that. I don't want to confuse you guys, but I would expect to see some currency strength coming in for odd for the week of this week. And then this is going to be a bank rate decision here. And this would be for Japan. what do you think's going to happen? You know, I don't think we are going to see anything different, right? I don't think anything is going to be that much different for, I would say, for Japan. I think Japan was going to continue with their monetary easing, and I don't expect them to raise interest rate. So you know what that's going to be for Japan. You know what that's going to happen, and it's happened every single time this year. Every time they announce their interest rate have not changed. Look at -10, they expected -10, they came in at -10. It's -10 now, or -0.1. It's expected to be -0.1. We can damn near assure it's going to be -0.1, right? Hey, Mike, hey, Bob. Oh, you're going to be on the plane on January 2nd? Okay, well, you can catch the recording for sure, right? So you can see what's going on for the week for sure. Okay, so with that, think about this. With that being said, on JPY, that means some of the trades that we're short on JPY, and if we're in profit, we may want to put in those protective stop losses to protect those trades. So in other words, when it comes back, it's going to basically stop you out and then reload, right? All the other pairs that we're seeing that we're expecting to see some pullback, most likely this is going to be the time it's going to happen. So we're going to have some JPY weakness. I can rest assured that's going to happen for this week. Japan was pretty strong for the last couple of days last week, and most of the days last week. But this week, I can expect to see some Japanese weakness. So there's going to be some good pullbacks on JPY for the week. In fact, probably for the next 2 weeks, finishing out the year. And then come January, we'll probably start to see some Japanese strength as the JPY pairs to reset. So in other words, for all my coaching students, reload. You know how we do it, because we're definitely going to be seeing some downtrend on JPY after the first of the year. Okay. So that is the bank rate decision coming up for Tuesday. And then like going into Tuesday, Asian session, and the Monday. Okay, so for Tuesday, we have basically core retail sales for Canadian on Tuesday. I would expect to see some strength in Canadian dollars, right? So the core retail sale was -0.7. They're expecting it at 1.5. I think this is going to come in pretty strong. I think this is going to help Canadian dollar for the week, okay? Nothing else for USD. I think we're going to probably just continue to see USD strength technically. So because there was some, we did raise interest rate to expected rate. Based on technicals, I see USD coming in continue to be strong. Okay. Then on Wednesday, we have the Canadian CPI data. Last week, we had Euro and Pound CPI data. This week, we're going to have Canadian CPI data. And I think Canadian CPI data is probably are going to remain the same in terms of interest rate. The interest rate is at basically year on year 6.2. It's coming down at 6.1. They're expecting around 6.1. I think it's going to come in around the same. But I think the CPI data month to month is going to be the one that's going to be kind of like, you know, are we getting better from an inflation rate standpoint, or are we getting worse? But either way, I think this is going to continue to maintain the strength in Canadian for the week. They've already raised interest rates, so I think they're going to be fine. And then we have USD news coming in at 10 with the consumer confidence. I don't think this is going to be a major mover like CPI, PPI, non-farm payroll, or FOMC rate decision. I think this is just going to be kind of a normal range in US dollars to just continue to be strong. And then on Thursday, right? Thursday on December 22nd, we got final GDP unemployment claims. Okay. So this right here may move the currency, right? And I think it's going to be just more strength, right? I don't think the GDP has gotten weak. Historically, it's been doing pretty well. The last quarter report did just basically did the same, and we're going to probably basically stay the same, right? The unemployment claims, however, I don't think that is going to be any worse. They're expecting it to come around a little bit higher than one before. I think it's going to come in around the same, but I don't think this is going to change anything in terms of the direction technically from the dollar once we take a look at it. By Thursday, I'm telling you, when we see Tuesday and Wednesday and the dollar just continue to be strong, if anything, Thursday can just be a small pullback to the upside, right? So we'll get a pullback down to the downside and then both go straight to the upside, okay? And then we're going to finish off Friday with CAD GDP month on month. Look like 0.1. I think it's going to come in at 0.1, right, on December 23rd. And then we got core PCE price index. I don't think this is going to be a major mover or impact on anything on Friday going into Christmas weekend. Okay. So basically this week, here's what I'm expecting. I'm expecting odd currency strength, JPY weakness, CAD strength, and USD strength. Okay. Now, that is what I'm expecting this week based on what I'm seeing from a fundamental standpoint, okay? What's kind of aligned technically, and we'll take a look at that. So make sure you make a note of that. We're looking to see odd strength, JPY weakness, CAD strength, and USD strength, okay? And I think that's going to be carry on for the remainder of the year based on those four things. Okay, so let's look at the following week, the last week of the year. Obviously, we got, bank holidays, Christmas weekend. And then we're just going to come in, look at you see, there's no red folders for the last week of the year. None. Just yellow and an orange folder on unemployment claims. That's basically a precursor of what we're going to see the week after, which is non-farm payroll. So other than that, Monday, banks closed. And then we got basically 3 days of trading, 4 days of trading, Tuesday, Wednesday, and Thursday. Friday is nothing. So that last week, I'm not expecting anything. Pound, PPI, not going to be a big deal. None of this is going to be a big mover. Like I said, it's going to be a ranging week. Okay, so that's the last week of the year. This week is going to be the only time we're probably going to see some volatility, but nothing major. Like I said, other than maybe JPY, but we're expecting weakness in JPY. Other than that, CAD strength and USD continue to be strong, okay? And maybe odd continue to be strong, or it can turn to get strong this week. And then we got the last week of the year, which is not going to be much. And then after that, we got non-farm payroll week, okay? We got pound and USD ADP joke, FOMC minutes meeting. That'll be increasing volatility, and then Friday we're going to have a big volatility for both CAD and USD. Okay, and that'll be the first week of January. All right, so those are your marching orders fundamentally. Let's get right to the charts. I'm going to pull up the dollar as we usually do, and here's the dollar on a daily chart. You can take a look. We went up. And we came back down. We went up and up and up and up and up, and it was looking crazy, wasn't it? So we did 100% retracement from here, and it just went to extreme level. We were looking at some crazy levels in the dollar since 2001. We were looking at as high as 121 this year. 120, and which was the year of 2002, 20 year. We did not get that high. We did get as high as, let's see here. We did get as high as 114, and that is about as high as we got. And then we just been on a downtrend for the last 3 to 4 months from there. Okay, so what happened this week? So we had the currency get weaker and weaker. We had this nice change of character, and that's when we know we were going down. And then it started to fade down. Nothing impulse move like this, just kind of a fade down. And as you can see, we kind of hit this low a couple days, and I didn't change this chart. I didn't change this marker from last time. And you can tell that it did exactly what I had expected, and it's on its way now. It's just a quarter of its way back to my minimum marker. Now, if you look on a daily, this is a key order block that's marked by this, indicator Sonar Lab, but there is another order block here, and there is an order block that's right here. So if we were to mark that level at the bottom of this swing, that swing high, swing low, it basically came down to this level and stopped, right? Because the next stop was down here. And for the dollar to continue to get weak down here, that means that FOMC rate decision would have to be either a no increase or a shocker decrease, right? And that was neither, right? And with the market being this low, we had already estimated basically since here that we were looking at possibly the bottom of the market, right? So, but we were creating lower lows, lower highs, lower lows, lower high. We did create a lower low, right? And it looked like we're making our way back up, right? This is not confirmed yet. And to be confirmed, we would need to see this or this kind of breakup structure. This would be a very good breakup structure right here. So if we see that, then we're basically on our way. We'll have a change of character. This is pretty good, and this is really strong. So if we see a breakup structure go past the 105 level, we're on our way up. Okay, so that change of character. This is that look like that one leg come back up, and now look like we got a lower leg to the upside. I don't believe we are going to see a break of 103.52 within the next 2 weeks, right? I don't think that's happening. We may see the bottom of this in terms of a retest, but other than that, I think we're coming back up here to this 108 level. And there is a possibility, believe it or not, this would be high probability. And I'm gonna mark that up here right now. I believe that is a very high probability. I'll put that as a yellow. And I see this, oops. As a medium probability. We're going to come back to this level. So what is that level? So this level right here, I see it because we have this imbalance. And I see this level right here, which is right above this. It's just that order block sitting right there. Let me go ahead and mark that. So the bottom of that would be around 109.75. So I believe we're going to come close to that. That is very high probability. And then there is a very medium possibility that we could see as high as 111 again, right? $111 in the US. Okay, so that is what I'm projecting for the next 2 weeks and going into non-farm payroll. I think we are going to come up here. I think after the January, that non-farm payroll report is going to really set the tone in terms of what the unemployment and employment is looking for the U.S. data. Again, the Fed doesn't care about unemployment at this time. They've already said we expect unemployment to increase as a result of the increase of the interest rate, and they're okay with that to slow down the economy. So they're saying, hey, it's kind of like it's kind of like damage control, right? It's casualties. So let's put it that way. We expect to see some, not damage control, but we'll see some friendly casualties in terms of, unemployment is going to suffer. So within the U.S., so they're okay with that. So I would expect the unemployment report to be bad, right? But this may cause the currency for the dollar to be strong. So we can see that. Okay. Technically, everything is lining up along this order. I don't think it's going to come down here, not yet. We're going to need to pull back we obviously got some really good key imbalances here. So that kind of supports that as well for mitigation. So these are the two key imbalances level here, 108, and again, up to about 111, okay? So that's the dollar. So if the dollar is getting stronger, that means inverse correlated to gold is weakness, right? So I am just going to move this over, right? Gonna move this over. I got some volume indicator here that kind of helps along this volume. You can see there's a volume line here for the push up, and this will be adjusted coming down, right? So this is another additional tool indicator that's part of the Sono Lab update that kind of help with volume. Obviously, this volume is pointing to this increase up, and it did move up. So when this starts to happen around Monday, we'll probably see a line volume here that will point to a pullback down. Okay, so this imbalance is no longer there. I do expect to see a break of structure. This would be the nice break of structure here. This would be a stronger break of structure here, but this is a nice one from the swing low here. We are not able to break this high of 1806, and I don't think we're going to see that within the next couple of weeks. Okay, it's been hitting this level since December 1st, and it's now December 16th. Today is the 18th, and it's hasn't broken. So that tells me we're going to come swing down now, right? This is that swing high. I think we're going to come back down. We got some key imbalances here that could be mitigated, which supports the reason of rationale to come back and give some weakness. Of course, we're kind of oversaturated or overbought in the market. So gold, yeah, it's definitely going to come down. I can see it. I have a target of this imbalance, and I would say it can come down as low as 1680 again. So this is my target zone. Anything in this area is, I would say, medium, but as far as probability, yeah, this is high probability. We're going to see this for the next couple of weeks going into the new year, probability level. So gold, I'm looking for weakness in gold. There was a nice little recovery on Friday, but I don't think that's going to be long-lived. It had a hard time still breaking at 1806 level. And I think it's time to see some weakness. And it got a nice, strong imbalance sitting right here that I would like to see mitigated. And it might even come as low as these levels, which is a very low probability. So I will put down low probability here. So gold, I'm bearish, and I'm bearish coming all the way down to the 1674, 1675 level. Okay, so that's what I'm looking for. Is having a hard time. You may want to make a note that the top resistance or supply level is 1805. That hasn't broken, and we're looking to see gold come down to 1673. So if you're short, hold on your short. If you already exit out due to this little pullback, I would say reload and go light. And as it breaks that structure, oh yeah, go ahead and add to it. That's gold. Okay, S&P 500 is the other market that I look at for inverse correlation, which represents the stock market. And it is similar in correlation to US 30 and NAS 100. But the S&P 500 is a very good market. It covers basically the stock market, right? Top 500 indexes of the stock market of the top 500 companies, right? So this is where everyone basically core Roth IRA and 401k covers. And as you can see, we've had a pretty good fall from this, right? So we had a nice 27% drop. I have this level down here, and it's still a strong level that I have, this key order block. I haven't gotten rid of this order block because I was expecting it to come all the way down, which it still could, you know. And I'm gonna go ahead and put this level here because this is going to be more of a zone. So let me go ahead and move this down to right here. Okay, so let's talk about what has happened this past week. You can see where we had some lower lows, lower highs. I mean, yeah, higher lows, lower highs, lower lows, lower highs, lower lows. And then we kind of broke this and kind of came up equal, and then we came even lower, right? And let me put a little bit of a channel line there. Let's take a closer look at S&P 500 and what's really going on in inverse correlated to the dollar. Now, we had CPI data push this up to give us an equal high in S&P 500 to 41.59, and that's exactly what it did. And then since then, we had this nice drop, right? Nice drop there, and then we had a second day drop. So in other words, that change of character right here was broken. Right? We had this nice character, we had the swing low, just all this right here. This nice support structure came up, came all the way up here to this high, grab a liquidity, and then now it's just starting to tank. And this is all inversely related to the dollar. Right. Well, when we have interest rate goes up, we expect the stock market to go down. Now, we were hoping to see a Christmas rally, but without a break of 41.65, I think we're going to see more of a Christmas pause when it comes to the stock market this year. And as a result, I'm going to just basically just move this chart down. And I think we are going to go lower now, right? I think the recession is going to be in full force. Interest rate is very, very high. Inflation is still higher, coming down, but slowly, right? And that's expected. Anytime interest rate is increased, the aftermath of the inflation rate is starting to come down, but it comes down slower. So it takes a good, what they say, 16 to 18 months before we start to see the effect of the interest rate in the inflation, right? As a result of the interest rate. So this means if the dollar is strong, yeah, I think this is going to come back down. And I am going to move this right here. That's going to be the zone. This is going to be high probability we're going to come here, right? And that would put us, from a percentage standpoint of a bear market, right back to 28%. If it comes all the way down to this level, we're going to be within that range, right? That range of a typical bear market between 28 and 38%, right? I know I've said different numbers, but 38% is probably the highest end of a bear market. 28 is typical, right? If you look at this bear market here, when we had the COVID situation, that was a 35%, right? And then we had this little small blip in 2018. Let me see right here, 2016, 2018. We had that kind of that mortgage crisis situation right there. That is a 20%, right? 20% typical. This is anywhere between 25 to 38. And we are definitely there. So it's a crazy market, very, very crazy, volatile year. As you can see, this was simple drop, recover, and then just rally up. Here, it dropped, short rally, drop, very short, drop again. Oh, wait, we're rallying. Nope, we're dropping. Oh, it's going to be a nice rally. No, we are going to be definitely coming down, right? So these two probability zones are very, very, very high. I don't think we're going to come all the way back here. This would be extremely low possibility, which would bring it to 38%. But that is closer to that percentage. So I'm going to have to put a low there as a possibility, right? So that is what we're seeing And I think that's what's going to happen for 2023 first quarter. Now, we talked about the interest rate, or in terms of when we looked at it last week, and the Fed did increase interest rate by 50 basis points. In the press conference, they talked about increasing the interest rate in 2023, and they do not expect to see a pause or a decrease in the interest rate until possibly end of 2023. And they're looking to raise interest rate to another possibly 0.75 basis point for the entire year, meaning, several meetings, FOMC rate decisions next year might be 0.25 basis point until they get another 75 basis point. And it looked like they're targeting around 5% interest rate. Okay, so that's what they look like. They are trying to target. So if you look at the CME group probabilities, they are looking to increase interest rate another 25 basis point, and there is a 73% probability we are going to see that 25% basis point, which will continue to strengthen the dollar because they are raising interest rates. So any interest rate increase is going to show strength in the dollar, but that is going to decrease the S&P 500, however. But I think this is going to be, continuing for the next 4 meetings: February, March, May, and probably up to June. And I think June, once we get at the 5 or around the May, the March and May, that's when we'll probably start to see no more rate increase, right? So when that happens, I think we're going to be more going into the phase 2 of the market and of interest rates and correlations, right? Phase 1, phase 2, phase 3. Phase 1 is the tightening, when we start to stop printing money and we start raising interest rate. And then we're going to get into phase 2, where we start to pause and not raise interest rate anymore, right? So that's when we'll probably start to see the bottom of that market, right? And possibly somewhere around here. So I'm going to expect to see the market continue to drift down, drop to about March. So we could be down here around March, we could be here around March, or we could be somewhere in this range. This is a very extreme low probability, but if you were to rate it, we could be here, we could be here, or it could be here. Okay, so anywhere here is what I'm expecting, man, that we could see the bottom of this market around this area. And that's going to be crazy, but this is going to be all buy zone, right? And I don't think we're going to see the top of this. I think we've seen the top, and I think we're now drifting down. I think the dollar is going to continue to be strong. That's my, analysis and what I'm seeing from, and what I've experienced from, FOMC rate decisions, inflations, and historical and price actions and fundamental. Dollars at the bottom. We saw stock market reach the top here, and it's already swinging down. Dollar showing some strength. Guess what? I think we're going to see that for the first quarter: January, February, March. And March, that's, if I was to, not look at my chart for a specific period of time, that's what I would do, right? I would not even come and look and think that I'm going to see a dollar weakness or even an S&P 500 bull rally until March. And I would best bet that if I were to turn off my chart and not come back until 3 months later and look at March, I would expect, this is my crystal ball kind of expectation, I would expect the market to be somewhere in this range. It'd be scary that it actually happened, but I do think we're going to definitely see the bottom of this anywhere in here. And once we see that, and if we see interest rates increase and we're starting to see this not break structure to the upside, then there's going to be more downside, right? And we are definitely going to closely watch this next year, every single week, as the S&P 500, continues to drop, and maybe the dollar continues to get strong. Okay. So let's look at the Bitcoin, right? Bitcoin, cryptocurrency, in terms of the inverse correlation to the dollar, right? Now, we saw a little bit of upside to Bitcoin. That was nice to see. It got up to about as high as 18.3, far from our upper range of 21.3, which I want to see, right? And it did not. That was just swing high up here. And it didn't even go up that high. We got a huge imbalance here, which we know eventually is going to have to mitigate, but it doesn't follow like that on every single currency. It's Bitcoin, cryptocurrency, right? And Bitcoin, it does not follow the same, I would say, the same volatility measure as S&P 500. Like you see S&P 500 is like dropping, and it's dropping pretty hard in the last couple of days. But for this, it's coming down, believe it or not, it is. And you'll see it. Let's see, make sure. Yeah, okay. Let me zoom in a little bit. So you see how Bitcoin came up to about here, came up to this 50%, right? So it came up from the swing high, swing low, and we're looking at a 50% pullback, and look what it did. Isn't that amazing how this indicator has a swing high up here in this trading range? It identified that swing high, and it identified this swing low. It did kind of a trend liquidity, right? This is liquidity grab, this is liquidity grab, and then boom, it goes up. Right, and then it grabs this liquidity. It comes up to 50%, almost to the T, between this swing high and swing low. It came to 50%, and then boom, came back. Right. So this tells me we're not ready. We're not quite ready to go up. It didn't break that structure, and that means we are coming back down. Right. So it follows the S&P 500 or NASDAQ technically, for the most part. And it's very highly correlated to that, and it's inverse correlated to the dollar. So therefore, we are going to see downside to Bitcoin. Boo-hoo. Right. So we are definitely going to come back and revisit the lows, or in this range of the low for Bitcoin. Not exciting, I know, sucks. However, this is going to be exciting. We may see, right? Hold on. We may see, which I doubt, we may see as low as 14.1. I doubt it. We may see in this range, but if we do break, then 14.1 is coming. But I will say we are definitely going to come all the way back down to revisit around 15.4, around this low. Now, if the market doesn't break and it holds around this level, either way, I'm expecting to be in this range for the first quarter of the year. Yeah. So for this first quarter of the year, for January, February, March, we are going to probably stay in this range. Okay. When the stock market starts to recover around March, I'm expecting some very strong. Okay, so let me put it here and go. So here we may see this, we may see that. So let me go ahead and kind of, this is what I'm expecting. Okay, so January, February, March, we're going to probably stay in this range. If we break this, then we're going to probably come just low as here. And I don't think we're going to break this at all. But here's the key important thing that everyone needs to know. January, February, March, I can suspect that we are going to probably stay in this low range. If we break out of this range to the upside, we're going to probably stay in this range. If we break down to the downside, we're going to probably go as low as 14.1. And that is probably the ultimate low that I'm going to predict on the market right here from Bitcoin. After the first quarter, we are going to start to see a bull run. And we got the halving coming up in 2024. So pre-halving, with the stock market recovered, with dollar weakness coming back in, we are going to see a bull run from the end of the first quarter to the end of 2023. And I'm going to put this on recording, obviously, that I'm projecting that we are going to see 25, and we may even see as high as 32, or even as high as 40 by year end. Okay. And we are definitely going to see 50, 60. I would be surprised if we do see 50 by year end, but I am definitely projecting to see 32 and I'm sorry, I'm definitely projecting to see 25 and 32 by year end. However, there is possibility we could see as high as 40, right? But this is my projection. We're going to be somewhere in this range by end of 2023. Okay, that is a good thing, right? Suck that we may see a first quarter be ranging a little bit lower, stay low in this range, but starting after the first quarter, we're going to start to see a little bit of a rally, and then by mid-year we should see 25, and then by the end of by mid-year we're going to start to see more rally of Bitcoin, and this is going to be explosive this time. Okay, I don't know how high it's going to get, but I can tell you with the halving coming up and Bitcoin mining is going to be a little bit harder to create, and therefore it's going to be more scarcity in the Bitcoin. Therefore, 100,000 coming into 2024 is very, very plausible. And imagine that. Okay, so that's Bitcoin. That is cryptocurrency, and it's going to come back, and it's going to come back with a vengeance. It's going to look. You're going to see something like this. It's going to be insane. It's going to be insane. I'm cautioned, but I'm at the same time I'm very, very hopeful on seeing that. So I'm excited about that. Let's definitely keep an eye on that. If you're in Bitcoin, you're holding Bitcoin. Be honest with you, I would hold Bitcoin. And even if you're just like, say you're trading and you're just holding and you're just accumulating, swap fees, trust me, this swing up, it's going to eat up all of that swap fee like it ain't no tomorrow. You don't even have to worry about it. Okay, so that's Bitcoin, and let's get into some currencies now. Let's get into the dollar crosses. Well, okay, before I get into that, let's look at oil real quick. Oil. Okay, oil did touch down right here, right to my order block level that I had projected at 70.30, right? And it did come up. And then I did say if it didn't break that, we're going to come back down a little bit. However, I do not believe we are going to see this come back down. I actually think this is going to be the lower low to the upside. I think we're going to come back up there. Okay, I think the CAD strength is going to come up, and I think we're going to see oil come back up closer to 83 again. Right now, here's the key: this has to break this structure level, which is 77. So if you have a note and say, "Listen, I'm not looking to buy oil until it breaks 77," then that would be a good thing to do, right? Because it could come down and touch this again. And then I could be completely wrong, and it breaks this and it goes even lower to these two levels, right? It could come down to 66 and even down all the way down back to 61. However, I think that is a very low possibility. I would put low. And this is a medium possibility. It already touched that. It came all the way up. Check it out. It came all the way up to 77. That was a nice push in 3 days. Boom, all the way to 77. Didn't break it. Came back down, and it came out around 73. I think this is a higher highs, higher low. I think it's coming back up. So I'm looking bullish, especially when the market is right here still. It's still at the bottom of the market right here. I think there's more upside to the oil. And I think it's going to come up here. So I'm looking for a break of 77. And if that was the case, I would be bullish, right? If it doesn't come up here and break, then it's going to come back here and it's going to stay in this range, which is kind of be like, a bummer, right? It could be in this range. So if you're trading oil and you like trading oil, then that's what I would be looking for this break. And then the target would be, you know, like I said, around 83 to the upside for oil. And this is will be, I think, like I said, I think it's going to come with the strength of CAD, right? This CAD strength, it pushed it up. I think it's going to be a little bit of CAD strength along with this oil. There is an imbalance sitting right there. So I kind of do expect that to be a reason of mitigation as well. So I like to see that. And I think this imbalance is going to be covered, right? And I think we're going to come up here. We're going to come up here to this 83, and I think that's going to be the peak of CAD for, I would say, we'll probably come up here for the next 2 weeks and within the first month of the year. I think this is going to be a nice oil. We're going to see oil come up a little bit. I don't think it's going to break 83, but I need to see what's happening with CAD, what's happening with the rest of the currencies in terms of economics, and seeing where we're at. I don't think we'll come up here at 90, but that is a possibility. But we would have to first, you know, level 1, break 77, level 2, break 83. But I don't think we're going to come up there. We'll see. But I think this CAD strength is going to be able to be along with that oil strength to come up here. Okay, that's oil. Okay, Euro USD. All right, Euro USD is getting weak. We peaked up at 1.07, did not quite make it all the way up to 1.78, but we did go with 1.73, which is close enough. And I think we are going to pull back. Let me go ahead and just move my projection over. And we're coming down. Okay, so I'm gonna go ahead and this is going to be that break of structure right there, which is about 104. And I think we're going to come back here. We're going to come back around in this area of 1.01. So I'm still leaning on being bearish. So this is 101, and this is all the way down below parity. I don't think we're going to come all the way down below parity, but we could be playing around with it. But I think this is definitely probable here around this area, around parity 1. This is that's a break even. Just, yep, that's parity over here. So anywhere in this zone, we're going to see that. So this is first quarter of 2023. I think we're going to see this first quarter of 2023, and then that's it. Once we start making this, once we make the next bull run, right? This was a nice bull run at USD in terms of recovery. That was with the dollar weakness. We're going to see dollar strength come in, push this back down. I think we're going to push right below this 50%. Make sure I make this a little bit bigger. Yeah, we're going to dip below this 50% of this swing. So we're going to dip right below this, and this is where we are going to want to look for buys. Okay, if you look at the RMI here, stochastic as well, we got 2 indicators in one. So this is it's peaked. This is high. This is about as high as you're going to get, right? This is high probability. It went up close to medium probability of our level. And I think that's it. I think it's going to come down. We're going to come down. We're looking to come down around 1.01. I think that would be probably testing it. It might hold, you know, parity, and then that's it. So we're going to look for this to come down and then come back up, and we'll be ready to go. I think this is going to be all of 2023 first quarter. Pound USD, same thing, right? We came all the way to the bottom of this order block, which was, I didn't think we were going to come all the way up to the top, but we did come to the bottom of this order block range, touched it, and we dropped. Right, so pound USD dropped as low as 353 pips, and it's still looking bearish. Okay, so I'm bearish on pound USD as well. I'm gonna go ahead and drop that down. We're about to break this structure. This imbalance is no longer there. So go ahead and make that structure right there, that break of structure. And I'm expecting to come down in this range. And that range is around 1.15. I want to see pound USD. Look at pound USD. Look how just peak it is. Jeez. Right. So nice bull run. Now time for dollar strength to come in. Time for the bulls, the bears to come in for pound USD. Let's push it all the way back down to around this level. I would say anywhere between 0.16 to even 1.156. And in this level, this is when we'd be looking to buy. And then boom, we're going up. Okay. I think this again is going to be the first 2-3 months of the new year. Okay, odd USD. Odd USD is it's already making its way down. I think we are going to see a little bit more downside. We got this imbalance here. I think we're not going to see as much falls as we did with Euro USD, pound USD. So between the three pairs so far, like Euro USD, odd USD, pound USD, I think we are in better place of taking a short on Euro USD and pound USD versus odd USD. I could see this pair coming about this low and then probably start to range around here, right? It could come down here, but right now I'm looking at odd USD to come down around 0.65, between 0.65 and 0.63. That's odd USD. I'm bearish. NCD USD. Oh yeah, this is going to be a bigger fall. So if I had a choice between the Aussie and the Kiwi in terms of New Zealand, Australia or New Zealand, I had a choice between those two trades because they're basically the same darn trade, right? Their countries are right next to each other. So I would pick NCD over odd USD. NCD has a much more greater fall. It had a much more upside than it did on odd USD. Odd USD was not that bad of a, let me see, not that bad, but it already pulled back, right? And it's already coming close to our mid-level. So it's closer to the mid-level than it is with NCD USD. Look how NCD USD barely dropped. This thing has a bigger range to fall than odd USD. Okay, so I'm bearish on NCD USD, and I'm looking for NCD USD to drop all the way down between 0.59 to 0.57. And you come in this range, let's go, baby. You're in my buy zone. Let's go. All right. Other than that, I'll be short in NCD USD. This is I would be bearish. USD CAD. Okay, USD CAD has been in that range. I don't expect to see a lot of movements on USD CAD. I'm expecting to see CAD and USD to be in this range. So I'm not really excited about this pair because it's been in a range and range and range. Here's the thing. You see this right here? This is still my target for CAD, USD CAD. However, I'm going to expect to see some more ranging on this pair, right? So this is what I'm kind of looking at. This imbalance is no longer there. We peaked up here. We may see more peakness up here. So we may even see something like this. And then after the first quarter of the year, this is what I want to see. Right. So we may see something like this with CAD and USD kind of strong. If both currency are strong, we expect to see both of them be kind of ranging. So in this range. So I would not expect, if you see an upside, do not expect to see USD CAD blow past 1.38, especially 1.39. That's about as far as it's going to go. And then you're going to see it come back down. You might see it down as 1.34. You may see it down at 1.32, but I wouldn't get too excited to start chasing it. It's going to be in this nasty little range until the dollar is completely exhausted and we're seeing the reversal side of the USD weakness. And we may see, like I said, see in this range and then all of a sudden start to drop. Okay. So other than that, I would stay out of USD CAD for now until after the first of the year, as we start to see more developments of what's going on. If the USD dollar strength to continue on, then we may see the upside of this. We may see it, come up to a kind of a double top pattern. We could see something that looked like this, right? And then, boom, we drop. Okay, that can happen. All right. Okay, that's USD CAD. Let's go to USD Swiss francs. Now, this is what you would want to see. You see how it went all the way up and then the dollar weakness just dropped this pair all the way down, and it created some huge imbalances here, this huge pocket here, right? And this huge pocket creates an opportunity for mitigation, right? And it definitely broke this structure and it came all the way down to this structure, which is great, right? We expected to see this structure, and if it broke and it played around this area, then it came down, and that is by as far as it did. And now it's making its way back up, right? So that is what I'm expecting. I would expect to see this come all the way up to close around this area in this range. And this is the range where I would want to see us get back into a sell position. But other than that, this is definitely bullish. I'm looking to see down here with this currency, the way it is, the way it's looking. It's oversold. Market's been beat up. Dollar has been beat up. Swiss francs push it all the way down. And now I'm expecting dollar to, okay, take it over. And now push it all the way back up to this amount. This pocket is so evident to say, hey, we need to come back here, right? This mean reversion theory that it needs to come up and fill an equilibrium at least 50% right here. But since the gap is so damn close to it, and you got a clear order block right here, you know what? Let's come back up and get this. This is kind of that range of where we're seeing the dollar and USD Swiss francs been playing, and this whole range right here, right? It's been in that range. You see it? That range right there is what it's playing. So how do you play that, right? So we see the broke out of this range, and it hasn't breaking out below that. Well, we're going to see this up here, and we may see a little bit of a reaction there, and then boom, come up here. It's going to be in this level, in this range. All right. Could it pick up here? Of course it could. It was up here before, it was up here before. But this range right here is what? That's your sell zone. Plain and simple. This is textbook stuff, right? This is really good stuff. You should be excited about that. Down here, this is buy zone, especially when you see the market this way, especially when you're expecting strength into the USD. That shows us strength in Euro USD, pound USD to push it back down. We see strength is already in the dollar now. We're seeing gold is at the top of its range, and we're seeing the S&P 500 already start to fall from the top of its range. Come on, what do you think it's going to happen with USD Swiss francs, especially when you see this type of price structure, right? So buy now and sell later, right? That is my best guesstimate right here. This is where you definitely want to sell, right? You want to start to sell when you start to look in here and start to hesitate, and you got price ranging up here, back up in the upper range, and it's in that area. That's when you want to sell. You want to put a pin and sell there. You want to put a pin and sell there, and let's hopefully get filled in two position. Be great, but this would be definitely my minimum test trade there by one to see how far it's going to go, and then start, maybe placing another 0.01 there, and then put your full, size position. If you're one of my coaching students, you know exactly what I'm talking about in terms of building and scaling into position. Other than that, hopefully you sold here, I mean, bought there. And if you bought here, guess what? It's coming. You're going to break even there. So this is not a bad area to buy. Definitely want to buy low. And in this range, this is looking pretty good. Okay, that's Swiss francs. I'm bullish on euro, Swiss francs. Okay, let's look into our last dollar classes before we get into all of the yen. We are expecting what this week on yen? Yep, we are expecting weakness. So if we're expecting weakness fundamentally and dollar technically strong, what does that mean for USD/JPY? Especially when you have this imbalance sitting here, and we have another imbalance sitting here. And if you're one of my coaching students, you already know we've been looking to buy since we've been here. And since we bought, we're already up, over 457 pips. We're looking for more upside. Upside where? Well, the first level is definitely here to cover this imbalance. So around 142. And I'm looking for USD/JPY to come even as high as 145.3. Okay. Now, if we start to see USD/JPY start to mess around this area again, then this right here will be extreme. But if it's even more stronger for the downside for the USD/JPY. But other than that, this pattern still remains true. I do expect to see that upside. It's now starting to look like that. So there you go. So I'm looking to see this upside. It's just getting ready to break structure of 138 to the upside. And we're going to see this swing up. This is already, look at the markets here. It's already saturated in terms of being oversold. And we are making this way up, baby. This is going, it's going, right? And I think this is going to be a nice push when we see the USD strength continue on with an extreme JPY expecting this weakness as soon as tonight and even tomorrow when JPY announced their monetary easing, no interest rate increase this year, and blah, blah, blah. Okay, that's fine. Take it. We're going to take it out. Once you get up this area right here, guess what? We're buying. We're going to sell. This is our sell zone. As soon as it comes up here, it gets around 142. You can put a test trade for a sell, but I would say let's just wait. I think the dollar strength is going to keep pushing it up, right? Even if it gives you a little dip below, even if it gives you a little pullback, let's see if it covers just imbalance before we start to sell and get to the top of this range of the overbought condition. Okay, I'm bullish on the USD/JPY, and then we'll become bearish again. Okay, let's go to Euro/JPY. Euro/JPY, I think we're going to see this range again. We're going to come back up. Euro/JPY. I think with Euro/JPY, I think we're going to be in this range. You see this range right here? I think we're going to be in, if this does not break, let's see, let's put it this way. I think we're going to be in this range here. Going to be something like this. In fact, let me see. I think we may, I don't think we're going to see the downside right away. I think we're going to probably come see somewhere around here, back up here. It's going to be in playing in this range, guys. And then when Euro and USD start to get, Euro gets strong again from the USD strength, then we're going to see the final breakout. And that is what I'm projecting to see in after the first quarter of the first year. In this first quarter, I think we're going to be in this upper range. I don't think we're going to break 141. We haven't broken that in a while. And when we did back in May, we stayed in this range since then, since May. All right. September, I'm sorry. So September, we've been in this upper range. And I think we're going to stay in this upper range a little bit. We may, like I said, we may pull down. I doubt it because I do expect to see weakness. So both Euro and JPY weakness, well, that means when you see two strong currencies or two weak currencies, expect ranging conditions. Okay, that's US JPY, pound JPY. Yeah, same difference, right? You can see this range here because both currencies. I expect this is just ugly, just Euro USD and pound USD is just ugly pairs right now. So I expect to see maybe in this range. And then we're going to come back down here after the first quarter. I think we're going to see in this range a little bit, and then we're going to come back down. Keep in mind, pound JPY is going to come down. US JPY is going to come down. This level is going to happen next year. I'm definitely projecting that to happen. From a higher time perspective, we've been in this high, we've been in this nice bull run. We haven't seen the complete JPY pair drop from all of our JPY pairs, right? So US JPY, pound JPY, it is coming. However, with both these currencies expected to be weak for the next couple of weeks and maybe the first couple of months or first quarter of the new year, expect to see ranging conditions on those pairs. I would stay out of it, to be honest with you. CAD JPY had a nice drop, and check this out. This thing has been ranging in this low and had a hard time freaking breaking this damn order block. You see it? Look how many days. This is since December 2nd. Literally like 3 weeks. It's just like, no, I'm having a hard time, So what do you think that's going to happen? JPY weak, CAD strength. Yep, kind of like a USD JPY. Boom, shoot up. Look at these imbalances. We got one here, we got one here, and we got one here. That doesn't look that strong. Let me see. Small imbalance there, but let me go ahead and just take this out. We got one definitely up here, and you got one way up here. Those are very, very clear. Okay. So with that being said, I'm expecting CAD JPY to shoot up past 102. I'm expecting CAD JPY to come up as far as 105. So 105 is my ultimate target. However, it could come up to this high right here of 107. Okay. So if it breaks this order block and it stays around here and it looks like this up here, I would expect to see if CAD continue to be strong and JPY continue to be weak, there is a possibility we could see that. However, anything in this range here, that's my sell zone. Okay, this is my sell zone. This is my buy zone. You wouldn't want to be looking to buy. So if you're not in a buy, believe it or not, it's actually a good time to buy because the market did come back down and it's sitting right now around 99.8. So this is a good opportunity to take it. Look at this market right here. And I think it just stayed this low. I think the market makers took it this low and kept it this low because it knew that the Japanese yen or Japan's coming up with the rate decision, and they know it's going to be, weak. It's not going to raise interest rate, and boom, CAD strength come in, and boom, taking it back up. So this is what I'm looking for. Okay, CAD JPY, I'm bullish, and I'm bullish all the way up to at least 105. And it could be going as high as 107. Okay, CAD JPY. RJPY. RJPY, I do expect to see some strength in RJPY. Therefore, I'm expecting weakness in Japanese yen, and I'm expecting this currency to come into this range. Look at this range of RJPY. It's nasty, right? So we got since March, and it's been in this range ever since then. Guess what? It's going to come back up. It's going to come back up to this range. It could come up to just high level of 94, anywhere 94, 95. So that is what I'm expecting to see. So I'm bullish on RJPY. And once you get into this range here, that's when you want to start to sell it. So around 94 and it can get as high as 95, maybe 96. So anywhere in here is sell range. So right now it's a good place to buy. It might poke a little bit lower, but it's not going to break this. You don't have to worry about that. I don't think it's going to break that. Not with JPY weakness coming in. Okay, so that's all JPY. Let's look at NC JPY. Look at this. So it has already pushed to the upside, and it's already on the upper end. And I think NCD JPY, and I think NCD and JPY, I think the two currencies are going to be weak. So I think these two are going to be ranging, even though it looks like it's going to drop technically, not with NCD JPY expected weakness. The market is at the top here. Let me go in a little bit higher. I don't think NCD JPY, I don't think NCD is going to push this up here. I don't see it going anywhere near this level. That means NCD would have to continue to be strong, and I don't expect NCD to be stronger than what it already was. However, the Japanese weakness would probably just naturally gravitate anywhere in this level. It could, but it's been hard around this. So believe it or not, I would not be surprised if this pair stays around this area. Literally, I don't think it, for some reason, it's having a hard time breaking these high level. This is the ultimate high of the range of this pair. If you look at it from a weekly standpoint, I mean, this is about as high as, it's not going to go way up here. 92, not the historical level of 92 of 2014. This range in pairs, this pair came down the way down here already at March and came all the way up here. I think we're at that level. We're pretty much down. I think we're going to go up here. I think we're going to stay in this range. I'm looking at the weekly. So let me go to the daily. So with that being said, yeah, I don't think it's going to come way up here. This is not what I'm expecting. This pair to come way up here to 90, 94. No, I don't see that happening. No, not up here. I think it's going to stay no higher than 89. Go back to the daily. Yeah, 89 is by far as I can see. Like I said, I don't think this pair is going to go higher because I expect both of these two pairs to be weak. So therefore, I'm expecting these currencies to, and then boom, we're going to see that. So this may happen for the first, definitely the last 2 weeks of the year. We may see this for the first month or two. We may start to see something come down a little bit lower, and then we're going to see this tank. Japanese yen, this whole year has been monetary easing. It's really tore up the Japanese currency weakness, and this currency has suffered all year long. But we can definitely say I don't like calling tops and bottoms, but I can say we're probably at the top on NCDY for sure. I don't see this, getting any stronger. These levels, we're going to come back to 82 after the first quarter or after the first couple of months, and then we're going to start to make our way down. Okay, so if you're on the bear side camp of JPY, boy, we got patience, and I can tell you, it's going to pay itself out, like this one right here. Chef JPY. Look at this range. Look at the weakness of this currency range since September, right? It was a nice push up with the strength of Swiss francs, right? From April, March, all the way back up. And it pushed it up to the historical level of CAD JPY. I mean, Chef JPY. Look at that. Historical. This is the highest it's been since 79, highest it's been since 2014. We went that high as 2022. This is my level all the way down here to 106. Is it going to happen? Oh yeah. Oh yeah. It's especially when you see this for September, 4 months. Look at this range. We have not been able to break this, right? So we've been in this range, and I think this is going to be the same with NCD-JPY. I think NCD-JPY and Swiss francs is going to be in this range and conditions for a little bit. I think Swiss francs is going to be weak. It's going to push. It's going to allow USD Swiss francs to push up, and with that, for that to happen, Swiss francs has to be weak, right? So think about this real quick. USD Swiss francs push up. If USD Swiss francs push up, that means Swiss francs has to be weak and more about the dollar strength. So if Swiss francs is weak, that means Swiss francs JPY, it's also going to be weak. And if we're expecting JPY to be weak, that means both of these currencies will most likely be in this ranging condition, right? Just a tad bit longer. Just a tad bit longer. So I'm expecting something like this. And then we push down. Okay, so just a little bit longer in this range. You can probably expect to see this dropped. I would say if you put a reload, I think my coaching students have it at 147, and I think we have it at another one at 149. Those are two great areas. If we're short now, start protecting it, let it take profit on that trade, let it come back up, 147, maybe 149. And then it's going to be ranging in this conditions, and then we'll be watching it after the first of the year. And as we get ready to continue to take profit, every time it reloads, come back down, take profit, reload, take profit, reload, until we see this break of structure. This core break of structure right here is what we want to see break out of this range, right? Go ahead and bring it down here. This is our range at 140, 144. That nice range, 144 to 147, and as high as 149. That is going to be the range for the next few months. Okay, Swiss francs and Japanese yen is going to be kind of similar in terms of weakness, like NCD-JPY. Okay, and I think that covers basically all of the yen. So even though it's ranging, there's really no trade in this, other than if you're already weak, stay weak, take profit. If it comes back up, let it hit your stop loss, reload. If it comes back down, take profit, reload until we get this break of structure 144. Stay light until we get this break of 144, and that's when we want to start getting heavy, because once we get out of this range, right, this is going to be a historical range. Once we get out of this range, that's it. We're not coming back. And once we stay out of here and we break out of this, that's it. We're gonna probably come down. We're gonna probably be in this range for a little bit, and then we're gonna drop even more. Okay. So CFJPY is a very good trade that you want to stay short. Even though we're in a range, if it comes back up to 147, if you're already in this trade, great. If not, put a pending order at 147. I would put one at 149. Both of these two are very likely to come and get hit, especially with the expected Japanese yen weakness coming. If you're not in this trade yet, then get ready. If you're in this trade, go ahead and start getting ready to put your stop loss in place. Go ahead and take profit, and then let's reload. Okay, so that will cover our JPY crosses. Okay, let's go into now some of the euro and pound crosses. Okay, we were short euro on around 158. And then this thing came all the way back up here to this damn order block. And this is not what we would want to see. However, that was kind of a last euro kind of interest rate change that pushed us up. And that's it. That's all you're going to see for euro odd. That would be an extreme for euro odd. Nice push up. Thank you. If you were short here, guess what? It's even more an opportunity to short now. Okay, so I'm go back to the daily. You can see where it came all the way up here to this top range of 159, and it already started to pull back, right? So we got a nice daily pullback on Euro odd, took advantage of that Euro odd Australian weakness, which sucks. So if odd was weak and we're expecting odd to get strong, odd against, odd JPY, that means we can expect to see Euro odd. And if we expect to see Euro be weak against Euro USD, and then weak with the JPY pairs, then we can probably expect to see Euro odd to be dropping. Euro weak, odd strength, pushing us down. We're going to see this breakup structure right here. I like to see this break. Let's see. Yeah, this kind of this range right here. I want to see it come break below this 155. So I'm expecting to come down, and I want to see this come all the way down about right here. Let me bring my 50% up. Oops. There you go. Nice. Got a nice little imbalance here. I want to see it come back in this range. So this range right here is where I am looking to. I want to buy. This is my buy zone. That is where I want to buy. You want to buy this up here. If you did, that's great. You get that little scalp. Now get out. Now, right? So now you want to short and get the big move. This big move right here, we're looking at a potential 944 pip drop. Okay, that's what I'm looking for on your. I'm looking for a nice 500 to 944 pip drop. I'm short and so bearish on your odd. Look at this. Let me just show you one thing right here. Anytime you see that, this is very, very key. Price went up. We see that. Very clear. Pushed up, bam. But for some reason, our RMI and stochastics is going down. This is the momentum indicator. You see that, you have a clear divergence on your hand, especially when it's on the daily. That is a very strong confluence that says, hey, bing, 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 this is imminent. Okay, and this is going to go like this. All right, and this is going to fall heavy. Okay, so I'm short, you're on. I like to take it all the way down to what price, my price target level, anywhere between 1.51 to even as low as 1.47. Okay, once you get in this level, this is where I would buy. Other than that, I'm shorting all day. So that's your odd. Let's look at pound odd, kind of equivalent. Okay, well, hold on. How come your odd went up, but pound odd didn't take that same move up? You see where it stayed the same? It stayed the same and did not. It did not break the 1.82 level, the 1.821. It had a hard time since the 5th of December, and it basically for almost 3 weeks just stayed there. And now we have a bearish candle that says hit the stops, came back down, went up, hit the stops, came back down, kind of drifted up, hit the stops, and now it's coming back down again. Oh, well, if that is coming down and we're expecting pound USD to also be weak, well, I can tell you that I'm expecting odd strength to come in, and with your odd looking to be that extreme high, I would expect this to come down. So this is my range. I want to see it come down here. We got an imbalance here. This is what I'm expecting. I'm expecting, well, I'll put it right here. These 3 levels. I don't think it's going to come out here. And I'm gonna put my buy zone here. Yep. Okay, so the 50% right here. We got a small order block right here, but we got a huge imbalance right here. So I like this area right here. So this right here is my buy zone. Anything in this area right here. So I'm talking about between price, I want to say 1.73 to even as low as 1.69. However, I'm really excited between 1.73 and even 1.71 to be a very good solid area to where you would want to start looking to buy. But this right here, oh my gosh, this is going to be a nice little drop. It's having a hard time breaking, which is great. Pound's going to get ready to get weak. I think pound has been, benefiting from this strength against the weak odd for quite some time. And I think we are going to come down to these two areas right here. I'm gonna put it like this. That's where I'm coming down. So great opportunity for pound odd to sell. I'm bearish and I'm looking for a nice 900 pip drop on pound odd, and that would be nice. We come down here and then we're going back up. Okay, that's going to be a nice short. Okay, that's your odd and pound odd. Look at euro and CAD and pound CAD. You definitely don't want to buy here. All right, euro CAD had a nice push up with that euro, that euro strength. If you were short, hoping you took a short here. It took a nice little drop from this top level of, I would say, was 146, and it now already dropped 137. Price has already dropped 137, and it looked like it's going to be a nice fall. Look at this imbalance here. Okay, I'm going to delete that one. Got imbalance here. Got a nice one here. 1, 2, 3, 4. But we got a couple of order blocks now. Okay, so this is going to be probably the biggest. If you were to take a trade, your odd is a nice setup for short, and your CAD isn't beautiful. Look how over. Man, this thing is like way just overshot. Just way overshot, overkill. It's like had no reason to even go this high. It's like it surprisingly even went this far. It's definitely not going up here, right? But it went this far to say, that's it. All right, CAD, time to take over. CAD strength this week. Oil starts shooting up. Euro's going to be weak against Euro USD. I'm looking for Euro against odd is going to be weak. It's going to be weak with JPY. Therefore, with CAD strength, I expect this to be slammed more than Euro odd. Okay. So with that being said, I am looking for, this is the 50%. I'm looking for Euro CAD to come all the way down to about 1.37 to as low as 1.35. Okay. Yeah, that's it. I'm looking for a nice high probability. That's about 50% right there. I'm looking at about another, just about a medium probability. I doubt if it comes just low, but if it does, it is possible, but medium probability about this level. And then I see a very low probability of us getting this low range here. That would be, in my opinion, my professional opinion here, with this shooting up that high, you definitely don't want to buy up here. Never. And this right here was the start of the swing all the way down, and we're 100% Fibonacci retracement. Bing, bing, bing. That's it. I think we're done. I think this pullback right here, we're already 137 pip drop. We may see a little bit of an upside, but just to kind of fake you out a little bit, maybe a little bit of retest, but that's it. Once we break this little small structure, if you wanted to wait and say, okay, if I wanted to wait, what did I wait for? You can wait for basically 1.43. Once it comes and break that structure, and you can go heavy, you can go light now, 143, start adding to the downside, okay? And then I can see this coming all the way, there's some structure here. Yeah, but there's an imbalance here and there's an imbalance here. All of these are looking to be reason for mitigation, meaning to come back and recover and cover those gaps. So this is the minimum I see it come down. But for me, I'm looking at around 1.37 before we bounce back up. So I like to see it come all the way down about 1.37, let's say 1.376, and then 1.35 possible. It would be incredible if it come down this low. I'd be amazed. Like, whoa, it came all the way down here. That it would be between 1.33 and even 1.32 would be extremely low possibility. But either way, you guys know what this is. This is our buy zone right here. You buy in here, you're doing the right thing. You don't want to buy here. Buying is the right thing to do once it starts to come down. You want to sell here, sell. But if you start to buy, you're buying early. It's like, yeah, you're buying, but you're way ahead. Not a bad trade because you're buying, you know, with the momentum coming up. But this is a downtrend. It's going to be a downtrend. It was an uptrend, but I think we peaked out. We're going to see a little bit of reaction here, and then boom, we're going to drop. And this CAD news, I think it's gonna really slam it down. I don't see this moving any more than what it's done already. You know, market makers can only take a certain market to a certain degree of differences in the weekly high accumulations or weekly low. The market makers is, you know, kind of, it's regulated by the IMF, right? The International Monetary Fund Policy, in terms of what it can and can't do before it causes a crazy market, shutdown or crazy shock to the market. So the International Monetary Fund, international in terms of how it regulates the foreign currency and the differences, they can only take this market and make so much of a net change, right? This right here is a huge net change. From the bottom of this to here, we're talking about 1,741 pips. This is a 13.54% increase net change. That's extreme. This right here, anything above this is an extreme. That's crazy. I think anything above here, people are gonna be like, whoa, what's going on? What's going on with EuroCAD? What are you guys doing? Right? You can't expect the markets to just continue to go and go and go and go up. Could we go up here? Yeah, but we're not gonna make that not quick of a net change that fast. Look at this market didn't shot up. Right, that's why this kind of momentum in terms of the volume is kind of measuring that change and go, whoa, this market is basically, you know, it's that change has been extreme. You're right. Basically looking to kind of say, hey, we should be seeing a reversal here. This is kind of at least back to down here with some of these imbalances that you left the sellers out, right? So we're looking to come down here. Like I said, this is my buy zone, but right now I'm bearish. Let's look to sell EuroCAD. Okay, pound CAD, another one, guys. This is a good one. Okay, pound CAD came all the way down up here to this order block, and this is a nice order block there in terms of order flow. This was a nice boom, and we had an imbalance, came up here, covered that imbalance, and we're done. We're done on this order block. We got nothing but divergence sitting here, right? Nothing but divergence, meaning price was going up and we had momentum already starting to curve, okay? So from this high to where pound CAD is right now, it dropped already 234 pips, okay? That is a nice drop. That is what we were looking for. We didn't expect the market to come this high, but it did do a nice push up. So that was fun, pound. You did a good job in taking that up. That's great. Now that you had the fun, pound weakness against the dollar. So pound USD down, pound JPY, both to be kind of weakness ranging, okay. Pound odd, that was extreme, looking, well, not that extreme as euro odd, but it's still at the top of range. So we can expect euro odd to be weak, pound odd, yep, down to the downside. So kind of odd take its strength, kick in. And we're looking at euro CAD now. Now, euro CAD by far is a better trade compared to euro odd. I mean, compared to pound CAD, sorry, pound CAD, it's a far better trade than pound odd. So with that being said, if you had to pick between pound odd and pound CAD has a lot more room to the downside than pound odd, but pound odd definitely looking to be weak because it was already at the peak. So with this, looking at pound CAD, I'm like, whoa, this is extreme. From this net chain up here, my God, that's a crazy move. We're talking way down here when we had that flash crash down. We're talking about a good 20% net change increase of 2,817 pips. It's not going to continue. I'm sorry. Pound CAD just not going to go through to the moon and forever. Not without some mitigation, especially when you have these imbalances gaps like right here. Got a imbalance gap here. You got an imbalance gap right here. And you got quite a few imbalance gap down here, right? So these microstructure, let me go ahead and get rid of that one. And get that one because those levels are been already exceeded. Oops. Okay. So with this 50% being right here in the middle, and I see a big, nice order block right here. High probability location right there. Short pound CAD has come down to 1.57. I like that. Medium probability, but it is possible. I doubt if it comes this low. That'd be crazy if it does, but it's possible, right? Probability is medium. Now, extremely low probability, I would tell you, not even in remote years, I would see it come down here. Oh, this would be even more insane, to be honest with you. If I see pound CAD come all the way back down, really? I mean, I get it. There is an imbalance sitting right there. Yeah, but for you to come all the way down from this high of it, and then come all the way down 1,800 pips, wow, that'd be an extreme swing. But it has happened. But right here, these are my probability. Now, get this. This is the buy zone, right? Right here. You dip below this level, and then I start looking, right? Start looking to see where my market patterns are and what's going on in the market to start placing potential buy orders, okay? So what is that? I'm looking for price to come down to 1.57. Mid target is 1.54, 1.541. I'm gonna put like 1.5, 1 point, let's say 1.54000. Okay. Extremely low. I don't see it come down. 1.49. That'd be crazy if it does. But anywhere in here is where I'm taking to short it. So if you short it now, great. Let's look at 1100 pips coming, possibly 1400 pips, and it could come as much as 18 and 1900 pips. I doubt it, but better short here. And if you're already short, hang on. It's coming. Be patient. It's coming. You're going to get out of this trade. This is going to be the next 2 weeks to the next month. Okay, so I would say the next month this is going to come down a little bit, right? And it easy get you out of this trade. If you've been buying since here, selling since here, and then you sold another one, you've already probably short out of this one. You're already out of this one. This is great. If you bought up here and you bought another one up here, then you're short out of that one. This one's next. This one's next. So we're looking at a nice, like I said, a nice minimum, 1100 pips, 14, and possibly 1800 pips. Short pound CAD, let's go. Euro NCD and pound NCD. Okay, NCD, I'm expecting it to be weak. And therefore euro and pound are expected to be weak. And therefore we are going to expect to see this type of reaction. Okay, we're going to see right now, it's already starting to be weak. So I would expect, a little bit of weakness in your NCD, but it could be more, let me see, let me put more like this. Maybe about, yeah. This right here, it may come up about that much, come down. And then we'll go up later. Okay, this is going to be like this for about a month. I see a little bit of upside, of course, to your NCD, but I think NCD is going to be weak. Look how NCD strength pushed it all the way down, and then we had a little bit of euro strength, push NCD, and then NCD came back a little bit strong. However, I think that's going to be short-lived, and we're going to be seeing this range here. That's no more an imbalance. Weak. I don't see it coming down that low, but I think we're going to be in the bottom of this range here. So your NCD in the range, not a good trade. I would stay out of it. Pound NCD, same thing. We're going to see range of conditions. This is what I see with pound NCD. And then we'll kind of come back up, right? When we start to see euro and pound strength again, that's when we're going to see euro and pound NCD start to get stronger again. However, we probably won't see as much weakness in pound NCD like what I just drew. I think it's going to be more like that. It's going to be more in that range. Okay, so I wouldn't take a trade on pound NCD. Just doesn't look favorable. There's no edge. And what I mean by edge, this is an edge. This is peak. Euro USD weak, Euro odd strength coming in. That's edge. That's an edge. Euro USD weak, odd pushing down your odd CAD strength coming in, that's an edge. Okay. That was an edge. This is not an edge, especially when it's been ranging like this. And I would expect to see more ranging. Okay. So euro NCD and pound NCD, I'm done. All right, so I did call the strength in here. I thought it was going to come down a little bit lower, and it didn't. And so it popped up here, and I think we're going to be in this range for a little bit, right? UNCD and pound NCD is going to be in this range because they're both going to be weak. Okay, so I expect range of conditions. Euro odd, euro pound. I think we should stay out of this trade for the next 2 weeks until January, mid-January. About to start to see some movement break out of here, but not right now. Euro and pound, I'm expecting that to be weak for the next two to 4 weeks, probably possibly to the end of the month of January. Okay, pound Swiss francs. Okay, pound Swiss francs, I'm expecting pound to be weak. Swiss franc might be a little bit stronger, so I think it may push it down here. I like to see it come down here, and then we're going to be in the range a little bit. So pound Swiss francs, I'm not really high on this pair. I do expect to see maybe a little bit of downside. It would peaked up here. I want to see a little bit more to the downside. It could come closest right here. I don't see it any higher than that. If it does come this low, then I would be looking to buy. If what's up here, like I called it out a couple of weeks ago or last week, I said you would want to short pound Swiss francs, and if you did, then that would have been a nice trade. You would probably went up 218 pips. But as of right now, it's more short. I think more short to the downside. But other than that, I wouldn't take this trade. I put this on a watch list. It's not even a trade that I wouldn't want to take now. I would take it up here, but not now. Ooh. Cash Swiss francs, yes. If you're in this trade and you took the buy, well, you really didn't go anywhere. If anything, you're probably down a little bit more. But hold on. Look at this. This is an edge. Look at that. Go to the weekly. Look at that. On the weekly chart, we're at extreme low. This is hell since March 2020. We're there. Let's go. This is a nice trade. Hold on to that trade. Cash Swiss francs. Oh yeah. I expect Swiss francs to be weak. We got all this imbalances here. We're coming up. So what kind of potential trade are we looking at? We're looking at, look at it. So that was a nice bullish candle. We're looking at a minimum 238 pips. We're going to come back up here. 500 pip. Okay. 500 pips. And it's going to be nice. That's going to be a nice trade. So I'm bullish. Cash Swiss francs, and this is what it's looking like. We're going to come up here. We're going to come back down. We're going to come here. We're going to come back down. We're going to come here. We may bounce around here for a little bit, and then we're coming up. CAD strength is going to be nice. This is going to be a nice trade for the next few weeks. Okay, CAD Swiss francs. Odd CAD. All right, this is an edge. That was a nice for odd to push up, and now CAD is taking over and said, okay, odd is going to be strong, but I think USD and CAD is going to be a little bit stronger than odd. And I think this is going to be ranging a little bit, but other than that, I think the overall strength is going to be given to CAD. And I think CAD is going to come down. If you've already short odd CAD, that's great. You're already up 175 pips, and this trade is not over. I think it's going to come all the way down to about right here in this order block right here. So I'm looking for pound CAD to come to this area to about 0.89 to as low as 0.88. Okay. So if I was to put a probability level, high probability there. So that is that level right at the 50% of 0.895. It'd be crazy if I see this come down here. That's pretty low to recover down here. But it is possible. So it could come as low as 0.88350. and then very low probability. Okay, that low probability level is 0.87, this structure right here, 0.875. Okay. However, once it starts getting here, this is where I would want to look for to buy. Not right here. This right here is sell all day long. Okay, short, odd CAD. I like to see odd CAD, spank it down, and this is even more conventional here. This is more of an edge. I really like this one. NCD CAD, spank it down. I'm expecting CAD to spank NCD weakness down, and I want to see this bad boy come all the way down to about right here. So short NCD CAD, I'd like to see NCD CAD come about 0.8200. That would be where I start to look. Medium probability level would be this order block right here. This is just a resistance support level, and this would be the actual order block level right here, a 0.8000. Let's go down. Let's say even 0.8000, and then very low. Geez, you know, this is like 100% retracement when it gets down to this level, right? We're talking about as low as 0.77. Let's say plus point. You can go even say 0.77000 in this level, right? Low, medium, high. So it can come to anywhere this level. But other than that, you know how we do it. This isn't a buy. This is where you want to take buy. Don't take buys up here. No. This is where we want to do what? Let's sell. So if you're selling, great, NCD CAD, this is an edge. Okay. Odd chef. Look at this. This is not an edge. This is not an edge. This was an edge. Saw that. That's an edge. Odd chef. Look at it. This is ranging, right? However, one difference though. This would range, come down, range, come down. We're now at the bottom end of our range, right? So on a weekly, this is extreme anomaly. So since you're down here, then I would want to buy, but to be honest with you, you can actually stay out of this trade. You got enough already, as we called out. If you like this pair and say, you know what, I want to, you know, I don't mind getting into a pair and just like this. Well, this is where you will want to buy, right? However, there could be more downside, but I think it's going to be more ranging than it is being ready to do anything. It's to be ranging. Odds with friends, I'm expecting that. Well, no. I do expect odd strength to be kicking in a little bit, right? So I do expect odd to come up here and then range around here and then go up. Okay, I'm gonna put it that way. So if anything, odds Swiss francs, I'm more bullish than anything. Okay. Hope you guys are taking your notes. If not, when you watch this recording, hope you're taking your notes. Okay, so you see how odd Swiss francs was down here, but NCD Swiss francs is up here. Okay. So with that being said, since this was a little bit more push on the upside, right? And I'm expecting NCD weakness and Swiss franc weakness between odd Swiss francs and NCD Swiss francs. Odd Swiss francs is a much better trade than NCD Swiss francs. I'm expecting this to look like this more than odd Swiss francs. So NCD Swiss francs, I would not take a trade on this. This thing is not an edge. This thing is going to be ranging. I'm expecting like, you know, Swiss francs maybe get weak. NCD is weak, so Swiss francs might take it a little bit stronger than NCD. So this is going to be like this. I don't think it's going to go any lower than this. I don't think it's going to go any higher than this for a little bit. So between the better two, if you like these ranging pairs, this right here is much better trade than NCD Swiss francs, and I think you guys can see that looking at this market structure, how it came down at this high, range, drop, range, drop, range. I don't think it's going to drop anymore, especially when you got this order block sitting right there. And if it does drop, which it already has right there, it's looked like an equal low. I don't think it's going to drop below that. And then we're going to come back up here. We're going to range, come back up here, range. And that's what I see. I Swiss francs, much better trade. Okay. Let me go one more, odd and CD, because this is the pair that I'm in, a drawdown in, and I don't like it. But I'm gonna tell you what I do like about this pair and what I'm looking at. Okay. First of all, are we at the top or the bottom of the range? Since September 22nd, this is the top. This pair has already dropped 1,000 pips on odd and CD. We're expecting what this possible week between odd and CD. I'm expecting odd to be stronger than NCD for the simple fact, as I look across the other crosses and where they're looking at odd JPY, I'm expecting odd to come back to the upside of odd JPY. NCD JPY has already peaked. Okay. Odd USD, I do expect USD to be just trumping everyone else. So that doesn't matter. I think odd USD obviously is going to tank only simply due to the fact that dollar's going to be just much stronger. Euro odd, odd's going to punch your odd. Odd's going to slam your odd down. Pound odd, odd's going to drive pound odd down. Okay. Now, when it comes to odd CAD, I do think similar to odd USD, I think odd CAD is going to be stronger. So I think CAD's going to be pushing odd down. But when it compared between odd and NCD, I think odd is definitely going to push odd and CD up. Odd Swiss francs, I think Swiss francs is going to be the lower end this week. And I think odd Swiss francs compared to NCD Swiss francs, I think odd Swiss francs is going to be pushing up. So with that being said, and when you're looking at this drop, and if you were to take the fib from here, let's say from here to here, we're at 100% of this move, right? So look at this right here. We take this, and we take this up here. You come all the way down here, you're talking about 100% retracement, right? Right now, looking at this pair, where price is at? Price is at this level. What level? We're talking about the swing that broke structure to the upside. It's right at 0.886 of the Fibonacci. That's a very key level. Now, I've been buying since it broke that 50% level here. So when it broke that 50% level, it was my small position, took another one here, took another one here, took another one here. And I went higher on lot size to get a better average price so it doesn't have to come all the way to 50%. This is my exit price right here. All I need is price to come up here and I'm out of all my odd NCD. And this is where majority of my drawdowns at, right, sitting right, because of odd NCD, because of me being confident on the trade. When I saw this, I'm thinking, come on, odd NCD, especially when I saw odd raise or interest rate in the currency. Fundamentally, odd is a better pair. But, the market says, you know what, I'm not done. NCD is still strong, and it pushed all the way down. Now, the risk is I may see a little bit of more of a push to the downside. I doubt it, but there is a strong order block, reason for it to come down lower, but there is nothing to mitigate. So could it come down? It could, but I can tell you that right now. First of all, the market is to the downside, right? And it's starting to push up. And we got more downside. That means we got a huge imbalance. Drop, and the market's starting to come up. That's a divergence, especially when you see this come up and it almost come up and it pushed down to the downside. All of this is a divergence, okay? And we got already the market drop all the way down this low, right? So we're talking about, like I said earlier, from that swing to that swing, 1,054 pip drop, okay? This top of the market is very, very historically ranging at this condition, right? Still down to the weekly. Look at that. That's the weekly. And look at how many times it went up to this high since November 2013. And look at the low, right? I'm gonna put the low here, about right there. So you can see where that market has come down in the past 9 years. Right there, pull back. Market came way up here, came down about right where my price is at right now. And what did it do? It pulled back. And it had not reached that high again for now. The last time it reached that high was right here, and it's right where it's at now, okay? Now, the variables is down below here. These are variable ranges. Now, it is highly unlikely that it would go to those lower level of the range because the market did not go in those lower range here. The market is in the upper range. So the more it's in the upper range, the higher of this range is in this level here. So in other words, this range coincides with this level. This range coincides with this level down here. I hope that makes sense. So when I look at that, I'm thinking, you know what we got to do when you get into those situations and you're looking at the market and you're analyzing it and you're seeing that the market is that much saturated, that much lower on the weekly level, on the daily level, on the 4-hour level, and you're already that low, you got two courses of action. Do you get out? Or do you say, you know what, I'm already in a heavy drawdown, stay longer, hold on, because if you get out, guess what's going to happen? It's going to range back up. You're going to go, darn, I didn't have to lose that trade. I could have just hold on to it. I don't care if you had 30%, 40%, even if 50%, 60%, you're already here. It'd be different if you had 50, 60% and you're up here. You're already here. You just need to hold on just a little bit longer. What do you expect it to happen? You know, especially when you already have a smaller range to get. We don't have to go to 50%. We just need to go right here. Basically, about another 100 pips, and we're there. We're out, right? So this is where I'm holding. And if you're not in odd NCD, this is even a better time to get in odd NCD. And if you're already in odd NCD, then this is even another location where you would want to add to it because it is coming. It is going to come back up. And we're looking at least, I would say 1.89 to even as high as this level right here of this structure of 1.110, okay? Now, keep in mind, we got an imbalance sitting right here. We got an imbalance sitting right here. We got an imbalance sitting right here. So we got all these market imbalances here, which got to be mitigated, which was where the buyers didn't get a chance to get in. We got a nice imbalance sitting way up here. And we got little small imbalances, but this order block is sitting right here on a daily. And we got an imbalance sitting right here. So the likelihood of price coming all the way up here, this would be my target, 1.09 to 1.10. POI, point of interest, high probability. That's what I'm seeing, right? And then medium probability, it's right there. For odd NCD, and that would be considered about 1.12 before we come back to the downside and then come back up. Okay, I think we're going to probably be in this range for quite some time. You know, just I think, like I said, it's most likely going to come back up here and then maybe come back down here, or maybe even come lower and then come back up again. But in terms of a pullback or reversal, pullback is all we need. A reversal is possibly, and if I were to buy this, which I am, I would buy this at least and try to hold it to this probability area, which is the range between 1.09 and 1.10. All right, and that will conclude our top-down analysis for the remainder of the year, going into the new year. All the coaching students will be back in the live trade room in the first week of January. We'll have our special top-down analysis for the new year on January 2nd, Monday. And if you can't make it, great. We'll have this recording and have it up and available. Hope you guys took your notes together. This would be the last trading week. Other than that, I wouldn't take any new positions other than just kind of hold the position, kind of manage position, protect the stop loss. We got some really good trade setups, some nice edge trade setups that we are going to see this week develop more like a continuation from last week. Other than that, have a good time. Have a Merry Christmas and Happy New Year to everyone. And let's look forward to a very good, profitable year next year. Okay, everyone, thank you and enjoy this recording. Okay, bye-bye.